Hey guys, Adam Rose, Vice President and Senior Loan Officer for Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guy Podcast, and today is going to be a quick market update. What's going on out there? Rates slightly changing and some events coming up. And the first thing I wanted to bring up was, as I mentioned before in my last podcast, we had a legislative day at the Capitol, but that was all sponsored by the Ohio Mortgage Bankers Association. And as the Vice President this year and going into the President's role in May, I wanted to announce that we do have our Homebuyer Summit. It is in person. It is going to be at the Junto Hotel on Saturday, April 5th, and registration starts at 9 a.m. So if you are in the Columbus area, if you want to travel to the Columbus area, I highly encourage you to do so. It is free, and we do provide childcare for ages 4 to 16, so the adults, the parents can come in, learn about the homeownership process, how to get pre-approved, what's this look like, the options out there. We're going to have credit experts out there and budgeting counselors. We're going to have mortgage lenders as myself and multiple other companies, Fifth Third and Huntington, Park National. They're going to be available as well. Real estate agents, people that are involved in the community. We're going to have developers, community partners. And what I mean by that is there's going to be a lot of down payment assistance programs out there, grant programs, a lot of things being discussed on how to get people in position to be able to achieve the American dream of owning a home. And there's a lot of great options out there. So, again, that is Saturday, April 5th at the Junto Hotel in Columbus, which is close to downtown. It's right across the street from COSI. And I am sponsoring the COSI tickets. So when you do come, everybody in attendance, including, obviously, the children, which will have daycare provided and a lot of fun games and activities for them, like an egg hunt and face painting. The whole family will get tickets to COSI to use that day or over the next couple of weeks, courtesy of us, of course, to do that. So I hope to see you all there. Again, Saturday, April 5th, 9 to 1 at the Junto Hotel. And I'm going to have Justin pop a little QR code up on your screen and maybe even the link on there so you can register for that. So now that that's passed, let's talk about what's going on in the market. So we've seen some movement in the rates, a little bit downwards, which is a good thing, right? I think a lot of people have been concerned about what's going on in the stock market. Again, the stock market is not directly correlated with mortgage rates. I see comments on Facebook, well, that's because the stock market's going down. No, it's not. That's not why. But anyways, I also want to make sure we get some traction and to this video to get some discussion going. And so I wanted to play around with an idea of how algorithms work and stuff like that by using trigger words like Trump. And see what happens. See if I pick up some more views by saying Trump, Doge, Elon Musk. Let's see what happens. Let's see if I can crank this up to a couple thousand views just by saying those things. But anyways, what's happening in the market? So, they were about, back up into the upper sixes, low sevens over the last, month or two. And we saw some movement downward over the last week or two, even after the discussion of tariffs going into place and the concern about inflation getting a little bit worse, which again is you're going to feel a small impact on the cost of some goods that we are importing from other countries that we're doing some of these reciprocal tariffs on. And they're not even that aggressive, but it's starting a little bit of a trade war, as you've seen. And the other night we had the address to Congress. It was very interesting to hear and talk about. And the Trump administration has talked about focusing on pushing down mortgage rates. Now, how are they doing that when the general consensus is, hey, if we have these tariffs, we're going to have more inflation? Well, we already saw how the tariffs didn't really impact mortgage rates in a negative manner. They kind of pushed them down. Here's kind of why, and I'm sure I'll get some negative feedback from some people that don't have much of a brain, but that's okay too. Bring it on. Anyways, what we're talking about is mortgage rates follow the 10-year Treasury bond, okay? Depending on what the yield of that Treasury, that's what the mortgage rates will typically follow. They're very, very directly correlated, okay? What is the 10-year Treasury bond, or what is a bond anyways? Basically, the bond is the government's way of selling or raising money or selling debt to people, right, to pay government debts. I know it's confusing, right? So they have to raise money, they issue a bond. Debt purchasers, other countries, individuals, institutions, hedge funds, you name it, buy up that debt or lend money to the federal government and they expect a rate of return on that purchase. So as our deficit is, well, our budget deficit is $1.6 trillion a year, but as everything continues to get worse, we're in the whole $36 trillion. Investors that are buying up government debt expect a higher rate of return, not because of inflation, but because of the risk involved of buying that debt. The more out of control our budget is, and the bigger the deficit, the more money they're going to want. Now, why this makes sense, and I'm going to explain here in a second what happened in the fall, is as Doge, and let's all hope that they are very successful in what happens here with Doge, okay? Their main goal is to hit $1 trillion in savings and shrink the budget deficit as much as humanly possible. And by doing so, we may be able to actually allocate funds towards paying down our $36 trillion that we owe right now. But by bringing down the deficit and shrinking that difference between what we're spending and what the budget is allowing, it's actually going to improve the 10-year Treasury yield. And when I say improve, I mean decrease the yield. It makes the government's worthiness or ability to repay their debtors much better. It's like a credit rating, right? The higher the credit rating, typically the lower the rate. So as that deficit shrinks, the yield curve should start going downward. Mortgage rates should also follow, even if we have some inflation hitting us a little bit, okay? It makes sense if you think about this. All right. So in the fall, let's talk about that. We saw 2 rate cuts, okay, by the Fed, and everybody thinks the Fed is dictating the mortgage rates, but they're not. Remember, the Fed funds rate is the bank's ability to borrow money, right, from the Fed to lend it out. But typically speaking, when we see Fed rate cuts, we will see a Treasury yield start to slowly go downward, and we'll see the mortgage rates follow. Well, it was the exact opposite. If you saw, I think it was in September, and I think there might have been another one in November, December. There was quarter point rate cuts, and the mortgage rates actually went up due to the inflationary measures. They didn't really care, and it's just because we constantly are spending more and more money, and our deficit is getting worse and worse. And the creditworthiness of the federal government was in question at that time because, again, $1.6 trillion a year in a deficit in our budget is just growing our national debt to a point where it's just not feasible anymore. So regardless of what side of the aisle you're on, guys, let's all hope that Doge does their job and hits their $1 trillion goal. That would be huge. It would be absolutely huge. But with that, I just wanted to bring that up, and that's kind of the reasons why you're going to see some market rate movement downward. Is the more money they find, they save, whatever the waste is they get cut, that helps our national debt, and it's going to help our budget every year, is actually going to improve the 10-year Treasury bond, my opinion, and the opinion of a couple of economists that I've read about as well. So let's have a discussion about it. If you have comments, feel free to spit out whatever you want to say, and let's have a civil discussion, if we could, please. But that's all I got this week, guys. Wanted to bring that up, let you know what's going on with the rates and the tariff talk. And it might be a little scary for a little while on some consumer goods, but I think in the long run, it's really going to help us. It's going to bring investment back to the U.S. and hopefully help us out in all the markets. So don't forget to subscribe on YouTube, guys. Check out this full video, share it with your friends. Remember to try to register for the Homebuyer Summit in April. Check that out. Justin will drop a link in here so you can register for that. Again, it's free, and you'll get some co-side tickets as well to use over the next 2 weeks. That's on April 5th. And also remember to subscribe on our Apple Podcasts as well as Spotify. Sorry, I'm a little spotty on my talk tonight. We'll see you guys all next week with a new visitor here. I'm going to have Aaron Barker from Southwestern Consulting, and we're going to be discussing the OMBA convention coming up and how he can help professionals in their careers and help them grow as well. And with that being said, we'll catch you all next week.